Today we're going to be reacting to the best trend line trading strategy from SMB Capital. So let's go check out what this video is talking about.
You've heard of trend lines, but you probably haven't heard of the surprising ways that professional traders at world-class trading firms use them. In this video, you'll learn the #1 little-known strategy that combines 3 trendline techniques for maximum trading results. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to have developed numerous 7 and even 8-figure per year traders. Watch, take notes, and learn so you can grow your trading account.
It's actually crazy. Mike Bellafiore and this guy who's about to come up on the screen next, they came up on a podcast with Humble Trader, and there was a little snippet from that where Mike Bellafiore goes, if you're trying to be a day trader only to make 100K a year, don't apply to our platform or our prop firm. If you're trying to be a six-figure trader or more, then apply to our firm. That's how serious these guys are. They only try to grow real traders. And if you're not making the cut, they know what type of traders can make it and cannot make it. You don't work there anymore. You get kicked out. This content that they post here, absolutely free gold. So let's go learn from it.
Really excited to dive in today because these are opportunities that work. They work in a couple different ways, and they work for a couple of very specific reasons, which we're about to cover. We really had a ton of fun putting this video together because we worked with a trader on the desk who has this really great reputation for trading trend lines, but he didn't really always have that reputation. In fact, kind of early on in his trading career, this trader was working to establish his consistency. You know, the first goal on our desk is always consistency.
Yeah.
Right? The first goal on our desk is always consistency. So this trader was particularly notorious for adding trend lines to his charts. So
astrology.
Oftentimes when we'd be talking about an idea, you'd look over at his chart and it would look something like this. He joked that his philosophy was, if you draw enough lines, eventually some of them will work.
Oh my God.
But kind of this interesting thing happened. He started to study and analyze every single line he put on his chart,
something will
and he
work.
learned which
if you
ones
throw
made the
enough
most
shit
sense
on the
to
wall,
him,
something will stick, basically.
and which ones responded the right way. So one day he put up the biggest day of his career. A couple days later, he put up an even bigger day. When we kind of asked him to share what he was doing that worked so well, he jokingly kind of laughed and he goes, yeah, I'm trading trend lines. In reality, he'd been studying and getting better and seeing what worked and what didn't, figuring out why that worked, and everything started to pay off, and he was able to explain exactly what he meant by that trend line break. And he was willing to share with us, which led us to have this presentation, share 3 of his best trend line trading strategies.
Okay.
You can't get into the strategies without properly identifying an important trend line. And what he's shared and what we're using here is a 3-step process to stack the edges for strategies that we'll go into next. So not all lines are created equal. So let's start by qualifying a really good trend line. To start, there needs to be a distinct point where the trend line starts, where it makes sense for the trend line to start from. So we can't just look at a chart and draw trend lines on it. There has to be a starting point where it would make sense that the stock or the product that we're trading starts to trend from.
Mm-hmm.
On our desk, this usually is a fundamental change in a catalyst, but it can also be a shift in the setup.
Like earnings or something?
Like this distinct shift in the price action. That's what we call that shift in the setup.
Okay.
It's any time that the way the traders that are participating in the stock or the futures product, anytime that there's a distinct change. Once we have that distinct point where a trend line could start from, we take a step back, we zoom out, and we make sure we're looking at least 60 bars on any time frame. So 60 candles, 60 bars, whatever you want to call it. If you're using 1-minute bars, that's about an hour of time. 2-minute bars, you're looking at 2 hours of time. 5-minute bars, you're looking at 5 hours. 15-minute bars, you're looking at 15 hours, or about 3 trading days. 60-minute bars, you're looking at 60 hours, so about 10 days.
Okay, we
you
got
can
the math,
expand
bro.
this out as needed as your time frames
Thank
expand,
you.
but these are actually really common
We got
ways
the math,
you'll
dude.
see charts set up on the desk anyway. So that's why we need to see that 60 bar
Begin at the beginning. TH, you're such a troll, dude.
Interchangeable on the time frame. So if you just take 60 bars, you can kind of get a good sense of the trend lines. So these tend to be the same across any product traded also. So that 60 bars can cover just about any product. Then it gets way easier for us to draw the trend lines. Third, we connect the first two major points.
TH is a troll.
So the first two
I love
major
TH.
points tend to be the first two distinct.
So you
higher
start at the
lows
starting
for a
point.
long,
Okay, got it.
Upsloping trend line like we have. Or distinct lower highs for a downsloping trend line. You'll notice we were talking about counter trend points initially as we're identifying a new trend most of the time. So when we're thinking about a trend line, we're thinking about that counter trend initially, so that higher high, and then, but more importantly, those higher lows. Now, this is the part that gets most people hung up, and some people even really heated, the thing we're about to talk about. There are lots of arguments about wicks versus bodies.
Okay.
Here's a general guide we use on the desk.
Let me hear it.
If the first candle, that initial candle that started this whole thing off.
Yeah, that's right.
If
That's
it
what
had
I
wick,
used.
we will
Yeah.
connect the wicks. We will use
True.
the wicks.
That's true.
If it
I'm
didn't,
truing right now. That's
we'll
true.
use the bodies of the candle. So the wick versus the body is this discussion that centers around what our expectations are. And we ground our expectations with which data, with whatever data is actually there. When we look at that initial candle that all this is starting from, was it a wick or was it a body? This is just telling us information about how the stock is trading. So now we can press into the three strategies that we can use. But I kind of want to go back because people do get so hung up. They draw trend lines that look great, but then the price action doesn't respond to the trend lines in the way they expect. So the trend line just doesn't work. And they say trend line trading doesn't work. So let's take a step and let's set the stage on how to address this.
Quantify
Trend line
it.
trading is not about what is happening. It's not magical that a trend line is
quantify what
happening
a
and,
trend
it's
line
gonna
is and
test
what is
that
a trend and what is not a
and,
trend.
and that's really going to work every time. That's not what's happening. Why it's happening and who is making it happen is going to identify what a trend line is and if the trend line will work. What a trend line is it's a line that measures a trend.
What did he just
the
say?
trend is created by why something is happening and who is creating that.
Okay.
So an identifiable series of higher highs and, again, that most important, higher lows.
Okay, but how do I know who's creating that?
That's created by traders. Why is it created? Who's creating it? Those are the stories of trend lines, not what is happening. The two things that we notice that can
created by
consistent
by
trend
cows.
lines are passive buy
created by
programs
cows.
for longs or passive
It's created
sell
by bulls and
programs
bears,
for
actual bulls and
And
bears.
it's really driven by participants that are being a little bit moderately price sensitive.
Okay, we
have
got that.
An office and down the street from our office are a ton of stores, right? The shoppers that shop in the stores on Fifth Avenue.
I guess he's
are
saying
not
it this
the
way
people that are
because
price sensitive.
he's making it more
The price sensitive traders are the
stupid
traders
friendly,
shopping at like
trader for
Macy's
dummy,
or
trading for
Dillard's
dummies
or
101 type of
Nordstrom.
thing.
You know, somebody
I
that wants
understand.
good prices and really decent quality. They're
That's
not
why he
bargain
said you
bin
begin at the
shopping,
beginning
but they're
because
not
and he's
paying up too
explaining
much
what
either.
how to draw a trend line
So
is,
this
right?
concept can really quickly describe the trend lines we're actually looking for. When the price comes in, the buyers are going to act appropriately. There will be a little bit of extra demand. When prices go up, they're going to have some extra supply. They're not willing to pay up and chase for it, but when it comes in, they're willing to buy. They're not going to buy super aggressively and run it higher either. The trend is going to remain as long as the same participants are acting in the same manner. Why we had to set the stage was because this little insight was really the breakthrough moment that led that trader to have that breakout day and then have that follow-up breakout day later. It's also the insight that is going to lead to the next 3 trend line trades we're about to talk about. So the first one is just very straightforward. It's trend trading off a trend line. This is probably the most common use of a trade, is when there's a clear trend established, and we'll start by
Guys
talking
trolling
about
me?
a failed breakout, right? Something tried to break out and then tried again and failed.
Oh, okay,
And
that's cool.
where the new trend was
Yeah,
established.
okay.
We identified that range.
Yeah.
It broke out. Came back in, and then confirmed the failed breakout. Once it confirmed the failed breakout, that is where that new trend potentially started from.
Yep.
Then we get to come in and we get a distinct second point, that second lower high.
Right side of the V.
All of a sudden have that trend line that we can connect to. And then the key is just to go with it, because nothing has changed. Something changed giving us this setup to begin with, that failed breakout. But then that trend line just keeps walking down and down and down. So our expectations for that trade is essentially that traders are going to short. Every time it comes up to that trend line, they're going to continue to short, continue to short, continue to short. That provides us with the trading opportunities we're looking for.
Yeah,
What's
but you
really
want to be
driving
short.
this,
But you want to be short here. After this failed breakout, you want to be short, risking this high, and then obviously you probably add somewhere here when it's actually breaking down. Maybe you add somewhere here, take some profits. Then you have this failed pop coming in and a lower pop. That allows you to put the trend line in. You can probably add to your position there, take some profits on this pop, add to your position there, get that lot back, and then take some profits out on this pop or this pop. And then once that trend line is getting rejected again, or if you don't have the trade already, you might be waiting for Vwap to come into play. The stock has clearly shown that it can trade under Vwap. It's pulling back towards Vwap and towards trendline. You can then look to build a new position somewhere here, risking that high, or somewhere here, right under Vwap, risking that high, looking for a bigger continuation move throughout the day into the end or so, or even a swing trade. If this is not an intraday chart, this is like a swing term chart, then that's how you probably look to enter that trade. But you technically wouldn't have this trend line already out right off the bat. You have this information. Ignore all of this right side information. You probably getting short on this pop over here. After this fail, you're risking that high. You're adding over here. After this high comes in is when you're putting the trend line in. And all that trend line now offers you is chances to look for places where you can reload your positions. The stock popped up, instantly rejected. The body was rejecting. Now you're seeing wick rejections, which is more aggressive selling, right? Wick rejection. So that's even better than that rejection. That rejection is much better than this rejection or even this rejection, allowing you to get nice little shorts back in. Once again, wick rejection, and then we get some body rejections again. That looks a little, maybe the trend is kind of normalizing, a lower low, higher low coming back in, but a lower high. We see a little bit of a wedge pattern here, and then the wedge breaks and the stock continues to go a little bit more lower. But obviously those are all like pattern tradings. This is where you first would technically enter, and then the trend line comes in after.
It is because algorithms aren't people. If somebody puts on a sell program that's going to passively sell
good
up
point.
into
This is a good point.
with a very distinct end to that program, that sell program's actually an algo that is going to lose on the last one. It's going to put on that trade every time that opportunity gets presented. Take it off when it moves favorably. But every time that happens, it's going to put that trade on until it stops working. It's going to lose on the last one, but that's fine. It won on all the other ones. So it's really going to think at the end of the day about all of those trades as one whole trade. It's not going to care about that last one because it's just going to lump it in with all the other P&L. The second trading strategy that we're going to have here is range trading off a trend line. So
like
we're
a
going to
channel?
find an intraday range move with a trend. Like a lot of times this is a pattern that will happen in low floats or something that's pulled back intraday, but it's actually very, very strong. It's a pattern we call the post and flag.
Yeah.
There's this unique twist to it that we're going to cover. And it was one of those kind of supplemental scalps that was added by our trader who made a living by drawing trend lines on the chart. So he observed that one of his best trend line trades was not actually the line he had drawn, but the line that generally followed the price action. So what happened was he stopped predicting. He saw that initial flag, and then he would allow the price action to occur. And he didn't actually have to predict what was going to happen. The price action was predicting what was going to happen for him. So he traded based on that. So he would be in from really good prices. But then he noticed he could just basically flag trade that. So he'd buy in and sell up, buy in, sell up,
scalp the range.
It gave him the room to really just trade the range. Stocks are in range most of the time, even when they're trending. So if they're trending to the upside, a lot of times they're trending in a range. We can't trade everything this way. But when we can identify it, and really when the stock identifies it for us, which a lot of times occurs from a very specific setup where there's a distinct change, and then that first higher low gets put in. Afterwards, we have those two connecting spots, and then we can just look for the price action to follow that along. And it'll trade up and down and give us enough volatility that we can range trade a trend line.
Okay.
What we don't want to get into and what we have to avoid is when we're trading a range that's actually a consolidation. That's one little hiccup on this, because if it goes up and stops range trading and goes into a consolidation, remember the difference between a range and a consolidation is a range can last as long as it wants to. A consolidation is simply a range with a pending resolution present. So a lot of times that's a distinct change in the price action that's trading within a range. That's what we call a consolidation. That distinct change suggests that there is a pending resolution. So we don't take a consolidation trade off of trend lines. We take range trades off of trend lines. Our third and final one is one that is a little bit different, but it's so effective. And the trader that kind of brought us these strategies, that kind of worked with us on these strategies, I actually asked him if we could cut it, and he said, absolutely not. This is one that is so important to share. You really want to make sure that you're covering it. Anchored Vwap as a trend line. So let's think about what we think of with most trend lines.
They didn't want to talk about it. He said cut it because they didn't want to talk about it.
Just on price, the price action, and the price action defines the trend line. Anchored Vwap is a trend line incorporating price from that defined moment that we talked about earlier, but then it also layers on volume. So when we were talking about this, when we were brainstorming this meeting, the entire idea here is that anchored Vwap can be this really effective trend line when used appropriately. And what's
I'm interested now.
A day two with resistance becoming support on a first move lower into a 2-day Vwap. This is really just a classic day two setup, and the concept remains exactly the same as if we draw the line on the chart. We are not drawing the trend line. The Vwap from that key point, which is that day one. So the day one has to have a big catalyst, it has to have a big move, it has to have big volume. The price action from that first day Vwap can guide us when we look at the anchored Vwap from that first day. It's actually a super effective strategy because all you're doing is buying into that trend line, very distinct stop below once the price action moves away, and you're moving your stop up as the price action works with you. All right, so we've talked about those
basically
three,
one of my setups.
But there's actually a fourth.
Now he's talking about my setup. Thank you.
There was a really good example of it the other day, and it was so clear to all of us when we were talking about it, we felt like we really needed to share it. So the number 4 strategy that you can use for trend line trading that you'll see traders on the desk use all the time is trend line break and retest. So this is when you have a trend line, it breaks, and it retests. This truly is a counter trend trade. But it's a big moment. That trend line break is always a big moment But it's so frustrating sometimes to trade a distinct trend line break, because what can happen so often is that it'll retest the backside of the trend line. And if you're trading the trend line break and your stop is the trend line, sometimes you'll even get stopped out. So you're going to let the trend line break happen, then let it test the backside of the trend line. And then you can take that easy scalp, because it was kind of the last attempt of those traders that were trading with the trend. Once that trend line is broken and then it tests and it can't get back up with the trend line, they kind of know the trade's over. That gives us a really good scalp.
Okay.
You know, that backside of the trend line trade, it isn't for anyone, but it's a scalp I really like waiting for. And when we were brainstorming this, traders in the desk really liked that concept. So let's cover a couple key takeaways. When you start scalping or trading off of trend lines, you kind of might start trying to take trend line trades on their own, right? We just talked about those breaks of trend lines. And you might think about trend line trades in isolation, but there are just so many variables associated with those that it kind of becomes super important to understand what trade you're actually making, and then use the trend line break as an add-on to that trade, like as an extra kicker for taking that trade. So we're not saying replace your trading with trend lines. What we're saying is use the trend lines as a check in your favor for a trade, because this stacks the odds in your favor.
And that will help you hold the trade longer too.
We like to adapt,
right? It will help you hold the trade longer. It would help you hold your winners longer. Maybe add to your winners
when there are more participants.
It's good. I like it.
Sure
I like
the
it.
stocks in play
Obviously,
to start,
a lot of people use it, but this is for some people that don't.
And then the little adjustments that you're going to make are really going to matter more on things that are in play. Otherwise, you're going to have more false trend line breaks. The more people that are trading something in play, the more in play a stock is or a product is. When you get that trend line to set up, more eyes are on that. It's going to work better simply because there are more people thinking and acting in the same way that you are. So when you can find really good in-play products and really good in-play stocks, they tend to respect trend lines a little bit better. Another thing we can't move on without covering is, how do you exit on trend lines? Well, a general principle here is to scalp half initially and then draw a new trend line. We call this strategy just a very simple half and trail. So what you're going to do is you're going to exit the first half on a really distinct move, and then you're going to trail based on that new trend line. When a trend line breaks, all it's typically doing is establishing a new trend. So just trail along with the new trend. Again, when you're defining your trend lines, think about the actual trade that's setting up within that trend line trade that you're seeing. If you're looking to learn more about the types of trades to make and some of the time frames you can use to guide your own expectations for how fast the trade will work, and then more importantly, what that trade might lead to, you can check out this video and make sure you're going through all 5 steps. They really may seem fundamental, but again, when we lay a really good foundation, we have something great to build on.
So you're an active trader.
All right. I mean, that was pretty good.
Not doing as well as
they talked about one of my setups in there. They talked about a bunch of other stuff in there that was regarding, you know, how to use trend lines to better situate yourself in a trade. If you're not in a trade, how to enter a trade and how to take profits off that said trade. So pretty good video over there overall. I think that was pretty informative, pretty educative, and hopefully you guys learned a lot from there, and I learned a lot from there too. Besides that, ladies and gentlemen, I think that wraps it up for this weekend and going into Christmas. I see you put in Christmas Day is Monday. Is Monday a holiday then? I'm guessing Monday markets are not open. I'm guessing Monday markets are not open. And if that's the case, maybe it's just vacation time, boys. Maybe it's vacation time. Hold up. Let's quickly go take a look at the screen here. There is a very, very good chance that I just take the whole week off next week. Tomorrow we do have Christmas dinner at work. So Christmas lunch at work, sorry. So we're gonna have Christmas lunch at work, and then there's a very, very high chance that I just take all of next week off. I will keep you guys posted on Discord and on Twitter if I do take the whole next week off, and then we start brand new, brand fresh in January 1st. If you guys are not following me on Twitter, that's the place to stay up to date on the stream schedules. So go ahead, follow me on Twitter if you haven't already. The links are in the description below, all other links on all their social medias and affiliate sponsors and so on. But yeah, if I don't come back for Monday or for Tuesday, then I will just pick the giveaway winners and I'll post them on Twitter and I'll post them on Discord. I'll try to get in touch with you guys. And obviously, guys, Merry Christmas to everyone that celebrates, and a Happy New Year. This year has been a wonderful journey with you guys. It's been amazing to meet every single one of you so far, at least through the internet. I can't wait to start this second half of my YouTube journey with you guys over here on my own channel. Thank you for everyone who's been supporting me so immensely throughout this journey so far. The journey is just getting started. We got a lot of stuff to do. We got a lot of goals. So I would love for you guys to stick around. Love for you guys to keep helping me grow this community, this channel. Once again, to everyone that celebrates it, Merry Christmas and Happy New Year. I will see you guys most likely back on January 1st. And for the giveaway and all other fun stuff, do follow me on Discord and on Twitter to stay up to date. Thank you guys for coming by today. I'll see you guys next time. Until then, good night. Peace out. Praddy out.